Michael, welcome back for our regular investment updates. I think the last time we spoke, we were speaking about FY 22-23 financial returns, and they were pretty strong. This year hasn't started so well. Can you perhaps talk to members about what we're looking at the moment with a performance perspective and what that looks like for the time ahead?
Yeah, so performance year to date's been pretty tough. The big thing we've seen really is in the bond markets, where we've seen rates go up, even in the last month, by around 50 basis points for the 10-year and for the 30-year in the US. So that's a pretty big increase. So what we're seeing is real rates rise. So inflation's coming down, but real interest rates are going up. And that's had a big impact on markets, both bond markets and equity markets.
So what do we do in response to that, Michael? What's the action we're taking?
Well, we've been positioned more defensively for some time, and really what goes well in that environment when you get real rate increases, mainly cash, goes better. Again, markets are volatile, so we are seeing markets go up as well as down. But there is pressure on, I guess, markets from these real interest rate rises. The US economy remains very strong. Unemployment remains low here. It's not like the world's falling off a cliff at this stage, but there are certainly some grey clouds.
So you spoke about stronger cash returns.
Yes.
As a super fund, we've got a number of different investment options, and members are generally invested for a longer time horizon. We are seeing people switch. So your view on investing in superannuation and the time horizons that members have?
Well, I think every member will have their own time horizon, so I'll just say that, and you've got to think about your own one. The last year is a very good example. We thought that the rise in interest rates would hurt earlier. In fact, it was a very strong year. So you don't know when markets are going to go up and down. You might have an idea of where they're going over, a reasonable period, but you don't know from year to year. I don't think no one knows that. And I would say what you need is a strategy, and you want to set that strategy in calm times, and you want to stick to that strategy. And what you don't want to do is change that strategy in bad times, because that's when you tend to make worse decisions. So when we do decisions, we have a framework, and we make decisions around that framework, and depending on what happens, we'll have something in place so that we're not making decisions under panic, if you like.
And so to members, remember, we do have financial advice, so you can contact the contact centre, and there's people in the business to help you with some of those decisions if you'd like help setting a strategy. Michael, last question for me today. We've seen a lot of global unrest, Russia and Ukraine, in Israel at the moment. Any thoughts from an investment market perspective on the impacts?
Well, even the US with the House unable to elect a speaker. So, look, we've seen some impact. So we've seen some oil price increases, for example. We haven't seen a lot to date, and that might be right, but there certainly is a risk of contagion here and a spread of conflict, and that would be, you would think, quite bad for market. We would see, surely, oil prices increase even more. And that would be bad for markets if we go that way. On the bright side, I think we are seeing countries like the United States doing all they can to actually dampen this down. There's a lot of diplomacy going on. Whether you agree with what they say publicly or not, I think behind the scenes we're seeing a lot of effort to try and contain this situation. Ukraine continues on. We're getting towards now winter, and you would expect not to see a lot of action over winter. But if it's a cold winter, we may see as well issues in Europe with energy requirements. So we'll see. But again, we've said this for a while, we've been wrong. But there are grey clouds, and despite the strong economies around the world, we do see harder times coming up.
So, Michael, thank you as always. We'll get this out in our quarterly newsletter. It'll be available on our website. To the members, remember, if you're after financial advice, please call our contact centre and one of the team will be happy to help you. Michael, again, thank you, and we look forward to next time.
Thank you, Sean.